So we had a nice upside move to break back above my supply zone. That's the white box here. This is what I referenced in the Sunday video of what I wanted to see happen, especially this week, because last week's weekly candle as well as Friday's daily candle was very bearish, and we did see a very strong upside move. Definitely caught a lot of the bears that added into Friday and maybe Thursday off guard, and we had a very nice inverse head and shoulders pattern, as you can see here, with the left shoulder, the head, and then the right shoulder, and then a clean breakout above this downward trend line as well as above the supply zone. So this brings a huge opportunity for bulls this week to hold what was previously a supply zone and now a demand zone, roughly this 4,170 to 4,190 range. Now, the reason I have this as a key range is because if you go to the daily chart here and go back all the way to around April and May of this year, you can see this was the range that was rejecting price for about 5 to 6 weeks of consolidation. This is also the range that we had to break out from in order to warrant a 400-point move to the upside. So very critical, at least previous resistance from over here. And now we are just back above it again. And not only are we above this range, if you remember from the Sunday video, I was looking to see a retest of this blue trend line on NASDAQ. Not only did we get a retest, we actually shot straight above it. Now, one caveat to this is today was FOMC. FOMC is known to have false signals, and there's a lot of fake outs that have happened. However, this is a very bullish development. The fact that we closed the daily above this trend line. If we close the weekly in 2 days above this trend line, you're going to see a very strong move all the way up to the high 360s to go to the top end of this trend line again. So watch roughly 351-ish to 352 going into Friday. If we're above that, you're looking at a very bullish move throughout the rest of November. So do watch this for sure. And another thing you are going to want to watch is the dollar. This is something that if you're a bull, you're going to want to see more downside on. Now, if I go to the 15-minute chart over here, we can see the dollar did have a strong breakout over here on Tuesday. As you can see over here, we did break above this downward trend line. It was also a retest of a previous downward trend line that had the breakout over here. So as of now, based on the start of the current session, we are retesting this downward trend line breakout. If it's unable to hold, we'll see a large down move all the way down to my yellow trend line around the high 105s, and that would make all of this a fake breakout. This would be very bullish for equities if we were to fall back below. Now, this is basically real time. The bears' last chance, and I'm talking about market bears. This is their last chance to try and catch a bid here on the dollar for more upside afterwards. Because remember, there is an inverse correlation, at least for macro moves, as you can see here in this chart. Whenever the dollar tends to have a strong move up, we do see weakness in equities, and hence the S&P 500, and the inverse would apply as well. So we do want to see that downside for continuation of this move in the S&P 500 as well as the market in general. So do watch this. Very critical juncture right here, real time. So I want to see a breakdown back below that can help bid the S&P 500 higher. And speaking of the S&P 500, we did see a lot of puts get closed today. A lot of premium behind them. You can see here 23.5 million, 10.2 million, 9.9 million, et cetera, et cetera. A lot of these puts were being closed. And I guess over here, the 10.2 million one was a call that was being opened. But regardless, still a lot of puts, as you can see here. These were below the bid, so they were selling those. And most of these were being sold into the rally that we've seen now within the past couple of days. This very strong end of October to early November now rally that we've seen after this inverse head and shoulders formed. And basically going forward, in order for there to be a new low made, if you are bearish still at the moment, you would have to see 4,150 break. As long as we remain above that level, we will not see any form of a new low. And basically bears would have to target this level by end of this week. We'd have to see a rejection up here to go back down below what was this previous supply zone. Remember what I referenced earlier in the video, this key zone over here, because otherwise, if you look at the weekly chart here, I compare it to the zone that I just showed you, the white box, we would have a potential fake out pattern over here, or setup, because basically the last weekly candle acted as a fake out where there was confirmation below this zone. But then if we were to close this week's candle back above, that is very, very bullish. And also it started with a gap up. So a lot of traders would be on the wrong side, which the market tends to form major bottoms around whenever a lot of people are on the wrong side of the trade. So this is a very strong move so far. Again, we do want to see continuation into the end of the week. But if we close this weekly candle above roughly 4,190, 4,200 would be even better, then we're looking at a very strong reversal for a lot more continuation into the high 4,300s even throughout the month of November. So you guys know I've been looking for some form of a major bottom. It looks good so far. Again, today was just FOMC, has a lot of volatility afterwards. It's known for false signals. But if we get to Friday and we're still above this level, you will not want to step in front of this train at all. It will continue for a very substantial move. So do watch and see where we close on Friday. One more thing I do want to point out, and I also want you guys to watch into Friday as well, a lot of things to watch the next couple sessions, is the VIX. Very strong breakdown so far this week. You can see we went from all the way up around 22 earlier this week on Monday, all the way down to a 16 handle now. So volatility has been crushed, and not only has it been crushed, it is now under my 1760 to 18 range, which is, at least just technically speaking, a risk on signal for the market. The fact that we broke back below, especially with a daily close, again, yes, it was FOMC day. However, this is a very bullish development as well for the S&P 500, very bearish for the VIX. These also are inversely correlated, even more so. But we did have this breakdown over here. In order for there to be any form of a substantial pullback from here, we'd have to see a cross of this 1760 to 18 range. As you can watch this range, you can see it even rejected the VIX intraday here around 1760, where we dumped into the close. So very nice to see that volatility has fallen so far, and we're getting that upside move that I've been looking for on the S&P 500. Again, there are a couple things that still have to happen by end of week, but it looks good so far. I like what I'm seeing. And even if we do have some form of a pullback tomorrow or Friday, as long as we're holding above roughly 4,190, again, 4,200 would be even better. This is a very bullish setup going into the rest of the month of November. So I like what I see so far. And other than that, I will see you guys in the next video on Sunday.